Okay, let's think about this. Have you ever stopped and wondered what's really going on under the hood in the crypto market these days? I mean, it's just this incredibly volatile space, right? Sometimes exciting, sometimes just confusing. Like, what are the big institutions actually doing? And how does that stack up against where everyday traders, the retail crowd, are putting their money?
It's a really interesting question, and yeah, the picture is complex. It feels like it changes almost by hour sometimes.
Totally. Well, welcome everyone to the deep dive. Today, August 7th, 2025, we are diving deep into the currents shaping crypto right now. Our goal here is to help you navigate what's been happening, market cap changes, how traders are behaving, what the big institutions are up to, and of course, all the new stuff in altcoins and blockchain tech. We want to give you a clear, comprehensive picture of what's really driving things.
Exactly. And what we're discussing today, it's pulled from a bunch of live news, real-time updates, so it's like getting a snapshot of market feeling and the key events happening, well, basically right now.
Think of it as today's crypto diary, maybe.
Yeah, something like that, but with, our added analysis layered on top.
Okay, perfect. So let's unpack this. We've got four main areas we want to explore. First, the general market stability, or lack thereof, and the overall sentiment. Then, this really interesting shift we're seeing in what retail traders are focusing on. Also, some pretty major moves by institutions that's reshaping things. And finally, just the constant innovation happening with altcoins and the underlying blockchain tech itself.
Right, and what's fascinating straight away is how stable the overall market seems, relatively speaking. I mean, despite all the individual coin movements, the total crypto market cap is holding pretty steady. It's around $3.72 trillion. Bitcoin itself, well, it's been trading around $115,000. Seems to have found a floor after that big run up to, was it $123,100?
$123,100, yeah. And what about the mood, the sentiment?
That swung quite firmly into greed, the crypto fear and greed index.
The one everyone watches, yeah.
It's climbed up to 62. So, even with some of those background worries for Bitcoin, like recession fears, rising capital costs, things like that, the general feeling is pretty optimistic.
Okay, but how do you square that bullish feeling with those traditional economic headwinds? Seems a bit contradictory.
Well, it's a key point. Traditional markets won't see those things as major red flags, right? But in the crypto world, analysts, or at least many of them, are staying incredibly bullish on Bitcoin, especially long term. You're seeing price projections. Some are saying maybe $200,000, even $250,000 by the end of 2025, even with this current consolidation.
Wow. So the thinking is that the big players, the long-term holders, they're looking past the immediate economic noise.
It seems that way. They're focused more on the bigger picture, the adoption story.
Okay, let's talk about that shift in trader focus. That sounds pretty interesting. What's happening there? What does it tell us?
Yeah, this is quite a distinct trend we're seeing. Retail traders seem to be moving away somewhat from the big names like Bitcoin and Ethereum. Instead, they're diving into microcap altcoins, the much smaller, newer tokens with lower market caps.
So less interest in the giants from the retail side, maybe?
It could suggest a slowdown in momentum from them, yeah, at least for now. It points towards a search for potentially higher, faster gains, which these smaller coins sometimes offer, though with much higher risk, of course.
So it's not like a rising tide lifting all altcoins then. It's more specific.
Precisely. If you look at the altcoin season index that measures how many top coins outperform Bitcoin, it's actually dropped to just 36. That really shows it's not a broad rally. It's more like a specific hunt for particular projects, maybe ones with unique tech or perceived high growth.
And speaking of specific hunts, meme coins are back, but different this time.
Kind of, yeah. We're seeing projects like Pepetto getting attention. They combine that sort of meme coin vibe with actual real-world infrastructure, things like zero-fee trading, cross-chain liquidity, which, for listeners, that just means easily moving assets between different blockchains. A big deal.
So solving actual problems, not just hype.
Right. It feels like maybe interest in the older ones, DOGE, SHAE, might be cooling a bit, and traders are looking for the next thing, like Pepetto. And then you see the power of exchange listings. Binance.us listing Toshi, TOSHI, and WorldCoin, WLD. They caused pretty immediate price jumps for them.
Okay, so that's retail chasing smaller caps and maybe meme coins with utility. But what about the institutions you mentioned?
Yes. While retail is, dabbling in these riskier areas, institutional interest in Bitcoin and Ethereum is still really strong. That's a critical difference. We've seen some huge buys. Strategy picking up over 21,000 Bitcoin, SharpLink grabbing over 83,000 Ethereum. These aren't small bets.
No kidding, those are massive numbers. What does that really signal for traditional finance, though? Is it just portfolio diversification, or is it deeper?
Well, beyond just the numbers, it feels like a shift, a new way of thinking for corporate treasuries.
Yeah.
Demand for Ethereum specifically is really growing. You've got various Ethereum treasury funds, spot ETFs. They've collectively bought something like 1.6% of all ETH just since June.
Just since June. Wow.
Yeah. And it's not just crypto firms. We're seeing traditional companies, even governments maybe, looking at Bitcoin for their reserves, like ECR Minerals, a UK gold company, planning to put up to half its free cash flow from gold into Bitcoin for long-term holding. Or Anime Holdings, that Japanese fashion brand. They've boosted their Bitcoin reserves to over 900 BTC.
That sounds like a massive vote of confidence. Bitcoin as a future reserve asset. And we're even seeing new companies built around this idea, right? Bitcoin treasury companies.
Yeah.
Like Parataxis Holdings emerging through a SPAC aiming for an NYSE listing with a, $640 million Bitcoin treasury? And Backed is turning Marusho Hata in Japan into Bitcoin.jp, another one. Plus Bullish, backed by Peter Thiel, planning an NYSE listing too, holding billions in assets. It feels like a structural change.
It really does. And it begs the question, what happens when central banks start thinking this way? There was that recent Federal Reserve report, exploring using gold reserve gains to potentially set up a U.S. Bitcoin reserve. That's a pretty profound signal about digital assets becoming part of national financial strategy, not just corporate.
Yeah, right. And Matt Hugin from Bitwise mentioned this too, didn't he? Saying institutions and governments are actively looking into Bitcoin reserves. Huge demand from the top. We even saw Bitcoin spot ETFs pull in over $91 million in net inflows just yesterday, August 6th. BlackRock's IBD leading the way. It really shows traditional finance isn't just dipping its toes anymore. They're jumping in.
Absolutely. Now, shifting gears a bit to the altcoins and the tech side, Ethereum is still a major force. Its value is up, over 64% in the last 90 days. A lot of that is likely driven by that institutional interest we talked about. Daily transactions are getting close to all-time highs again. And Ethereum dApps, the decentralized applications, they've generated something like $26.8 billion in user fees since Ethereum started. Huge numbers.
And the Ethereum Foundation is pushing to make it even better, right? Those Scale L1 initiatives, improving the main network.
Exactly. They're working on increasing the mainnet gas limits, improving the execution layer clients, basically making Ethereum faster, cheaper, and more capable.
Right.
Sounds technical, but it's all about handling more users, more applications, preparing for mainstream use.
Are there risks to pushing those limits, though?
There are always trade-offs to consider, yeah. Balancing speed with decentralization and security is a constant challenge. Oh, and speaking of altcoins, we saw XRP jump back over $3, mostly because people are waiting on that SEC decision about Ripple's appeal. Shows how much regulation still moves these markets.
Definitely. And the stablecoin market keeps growing too. Athena's USD seems to be a big player now, and traditional finance is very interested here. Kakao Bank in Korea looking at a one-pegged stablecoin. China testing renminbi-backed ones to maybe counter the US dollar's influence.
Governments are definitely paying close attention. South Korea's Financial Intelligence Unit is studying new regulations, AML measures for stablecoins. They want to figure out how to integrate them into payments safely. And it seems stablecoins are getting pretty integrated already. Apparently, almost 10% of crypto professionals get paid in stablecoins now, mostly USDC.
Wow, 10%. Okay, beyond stablecoins. What else is buzzing in DeFi and blockchain tech?
Well, Babylon Labs launched something called Trustless Bitcoin Vaults. It lets you use actual Bitcoin in DeFi without needing wrapped versions or relying on custodians. It uses zero-knowledge proofs for security that's pretty cutting-edge stuff that verifies things without revealing underlying data. Huge for Bitcoin's use cases in DeFi.
Trustless Bitcoin in DeFi, that sounds big. More secure, more private?
Potentially, yes. And we're seeing other moves, too. Curve Finance expanding DeFi on Etherlink, which boosts Tezos. MetaMask added the Sai blockchain, now supporting 11 networks. Alchemy integrated Sui's blockchain for decentralized advertising.
Okay, so lots of different platforms connecting, expanding.
Exactly. And it's even bridging into traditional markets more directly. PancakeSwap launched on-chain stock contracts for Apple, Amazon, Tesla, with leverage.
Trading stocks on a DeFi platform.
Yep. And tools like the Jupiter plugin are making it easier for any app to add crypto swap features. The underlying tech is just evolving so fast, creating more connections, more uses.
It really makes you wonder, doesn't it? As these things get smoother, how long can traditional finance stay separate?
That is the question.
Okay, so let's quickly recap our deep dive today, August 7th, 2025. We've got a market holding steady overall, around $3.72 trillion. Seems like long-term institutional confidence is strong despite some economic worries. We see this really interesting split. Retail traders are chasing microcaps, looking for maybe higher volatility or specific tech, while institutions are steadily buying up Bitcoin and Ethereum, treating them like, well, reserve assets. There's this new wave of meme coins trying to offer actual utility, moving beyond just the hype. And stablecoins, big focus there on regulation and integration globally. They're becoming really intertwined with finance and even national economic strategies. It's changing how we even think about reserves.
Yeah. And if you zoom out from all that, it leads to a really fascinating final thought for you, the listener. Think about this. Gold reserves have traditionally backed national currencies, provided stability for companies, right? So what does it really mean for the future when we see central banks, major corporations starting to treat Bitcoin as a strategic reserve asset too, seriously adding it to their balance sheets? How would that reshape global finance, maybe even faster than any of us are currently thinking?